Welcome to today's market report.
Confidence has been growing throughout most of the Western democracies that the worst of the COVID-19 pandemic may be over as economies reopen on the back of ramped-up vaccination programs. However, this optimism may receive a blow later on Monday, with UK Prime Minister Boris Johnson due to announce whether the planned lifting of restrictions in England on June 21st can go ahead on time. And this is in a country that has been very successful in vaccinating its population. The omens aren't great as the rapid spread of the Delta variation, officially a variant of concern, has thrown those plans into jeopardy. Total British cases of the Delta variant, first identified in India, have jumped by 29,892 to 42,323. Public Health England said on Friday, adding that the variant currently accounted for over 90% of new COVID-19 cases. Prime Minister Boris Johnson said on Sunday he is now less optimistic about the UK's pandemic outlook, suggesting restrictions may need to be kept in place beyond his target date for relaxing the rules. More government support for businesses is likely if there is a delay to ease Britain's lockdown restrictions. German DAX came off a record high, while the UK's FTSE 100 scaled its highest level since February 2020, but trimmed some gains as investors awaited an update on Britain's COVID-19 lockdown measures. After the European Central Bank last week kept monetary policy unchanged at accommodative levels, all eyes this week will be on the US Federal Reserve's policy meeting, with the bank expected to maintain its dovish stance. CAC 40 gained 0.24% to hit a new 5-year high, while the SPF 120 index added 0.25%. The S&P slipped from near all-time highs on Monday on worries that the Federal Reserve's two-day meeting could usher in a talk of bond tapering in the wake of a sharp upturn in inflation. The S&P 500 fell 0.22%, though remained close to its record high, 4,249.97. The Dow Jones was down 0.63%, and the Nasdaq was up 0.33%. Crude oil for delivery in July rose 0.78% to hit $71.46 per barrel. Brent oil contract rose 0.8% to trade at $73.27 per barrel. Gold futures for August delivery was down 0.76% to $1,165.35 per ounce. On the FX front, GBP/USD has been pressured in recent trade as now testing the critical short-term support and psychological 1.41 level. However, the prospects of a near-term downside continuation are limited by the potential reverse head and shoulders in the making on the hourly chart. The price is trading below a weekly 38.2% fib support area and the resistance of the daily highs and the sideways channel. Overall, there are probabilities of a deeper retracement of the weekly bullish impulse. However, this may take some time before playing out. The week started with some calm in major pairs, with a pullback of the US dollar and sharp moves in yens, crosses and the metals. However, volatility is likely to dominate all markets ahead of the two-day meeting of the Federal Reserve that will start on Tuesday. We expect a hawkish hold stemming from a shift in the dot plots, upgraded economic forecasts and potential tapering talk, with risks to US yields weighed to the upside. The dollar is likely to benefit from any bond market repricing of the Fed and inflation outlooks, according to BBH. The key move in cable was the rebound back above 141 after falling to 140.69, the lowest intraday level since 14th of May. A daily close clearly under 141 would suggest a deterioration in the technical outlook for the pound. The euro-dollar reached a fresh daily high during the American session at 121.30. The euro is among the top performers on Monday and is holding on to daily gains versus the US dollar, recovering from weekly lows under 121. The US dollar lost strength amid mixed equity prices in Wall Street and despite higher US yields. The dollar index was marginally lower at 90.483 after posting a gain of just over 0.5% last week. Dollar yen was at 109.76. Aussie dollar was at 0.7711.
This is today's market news. Thanks for listening. We'll see you next time.